All right, we are right on time here, so we're going to go ahead and kick things off. Good afternoon, everyone. My name is Jamie Terrell. I lead marketing and communications here at Saltmarsh, and we appreciate you joining us for part 3 of our CARES Act webinar series on provider relief funds for the post-acute and long-term care communities. It's kind of a mouthful. If you've attended our previous programs, welcome back. If not, you're welcome to check out our previous webinar resources. You can find these on our COVID Resource Hub. That is actually linked for you here on this main screen, saltmarshcpa.com/COVID-19. You can get there also by clicking the red banner at the top of our website. Here with us again are 3 members of our healthcare consulting leadership team, Andrew Kent, Claudia Reingruber, and Al Grimes. We're happy to have them leading our presentation today. We'll also have Allison Jones, Senior Manager in our audit practice, join to share some important information for those concerned about new single audit requirements tied to these funds. So we have a very informative presentation in store for you, but before we get started, I do have a few quick housekeeping items. First, everyone on the line has been muted as you've joined. If you do have questions throughout, please feel free to share them in our chat. That's a great feature in Microsoft Teams. What we'll do is we'll hold your questions for the end of our presentation. We should have some time to address your questions, so we hope to do that. You're also welcome to share any questions with us directly by email. Someone on the team will follow up with you. We'll have our presenters' contact information available for you in the slides. Today's presentation is being recorded. You'll receive a recap from us tomorrow, along with a copy of our slide deck. If you've enjoyed our webinars, please take a moment to let us know in the survey provided, and we'll be happy to keep them coming. With that, I'm going to hand things over to Andrew Kent, shareholder and leader of our healthcare consulting practice, to get us started. Andrew?
Thank you, Jamie, and thanks to everybody who's joined us today. Looking forward to hopefully what turns out to be an exciting and information-filled hour. We got a lot going on. As always in this post-COVID world, a lot of new information just out this week. So we hope that you may be here and we're able to share some new things with you today. Excited to have Claudia Reingruber and Al Grimes back with us. And as Jamie mentioned, Allison Jones as well. So as Jamie mentioned, this is the CARES Act Provider Relief Fund Part 3. We're going to be talking about terms, tracking, and reporting, and we're going to jump right into it. We've got a lot of information to cover. Going to try to get through it in an hour. So today's agenda, we're going to, as I said, be talking about the CARES Act COVID-19 relief funds. We're going to have an update on the currently available programs, the programs that are currently open for funding. We're going to have an update on reporting and audit requirements, something we know lots of you guys are very interested in. Lots of new information out recently on those reporting requirements and still lots of big questions. And then we're going to have an update on some frequently asked questions that we're seeing from, well, that have been published by HHS, and also go over some questions that we're seeing from providers, some folks in your shoes. The COVID-19 relief programs that are available. So in this broad spectrum of COVID-19 relief that's out there, it covers a wide range of programs. So there's the Medicare Accelerated or Advanced Payment Program. There's the suspension of the Medicare 2% sequestration. You've got the CARES Act SBA loan expansion programs. So that includes the Economic Injury Disaster Loan Program and the Payroll Protection Program or PPP loans. The Treasury has announced the Market Street Loan Program, which is another funding mechanism that is available to businesses who meet the criteria. And then you've got the CARES Act Provider Relief Funds. So these are the specific funds that were authorized through the CARES Act and are being administered by Health and Human Services. Claudia or Al, anything y'all like to add on those before we go to the next slide?
Can you print that out again, because I can't find it. Oh, sorry.
Claudia, I think you're on mute, Claudia. So one thing we wanted to notice here on the Medicare Accelerated Advanced Program, the Medicare Accelerated and Advanced Payment Programs, this isn't really a focus of our presentation today, but it's something we know everybody's dealing with and are getting lots and lots of questions. And one of the things that we just wanted to make aware of is that providers, those recoupment was supposed to have started on those payments 120 days after the date the payments were received. What we are seeing is that recoupment for a lot of our clients and providers hasn't started yet. And Claudia, I think you're off mute now. Anything? I know you have been looking at this pretty intensively for some of our clients.
Yeah, I apologize. If the recovery period would have started probably for many people on August 4th, since it would have happened on August 4th. And we are hearing anecdotally that that hasn't started for many Medicare administrative contractors. For example, First Coast Service Options has a webinar that they're doing on September 18th that may be helpful, but for right now, I think things may be on hold, but having said that, there's no guarantee. So, you want to be aware that that potential recovery could start at any point absent legislation.
That's right, and
things from CMS.
Right, and that's exactly right. And the only, we are also, in talking with many providers, their current Medicare billings are substantially off from the 2019 averages that the payments were based on. And so, just keep in mind when recoupment starts, if you're not going to if they're not going to be able to fully recruit payments out of your current remits, then whatever balance is left over at the end of the recoupment period turns into a loan. And the terms of the loan are not that favorable to.
Yeah, the interest rate is 10.375%.
Yeah, so something to keep in mind there. So, but today's focus, as we said, is going to be the CARES Act provider relief funds. That's really where we're going to try to spend our time today. So moving on to the next slide, there's $175 billion was allocated by Congress to HHS to be distributed to healthcare providers. 65 billion of that has now been grouped into what's called the general distribution. And we're going to talk about those general distributions. There's been 2 phases of the general distribution fund now. Then 110 billion is either in targeted distributions, which are going to specific classes of providers, or they have not yet been allocated. In the big picture, these funds are grants. They're not loans. The funds must be used to prevent, prepare for, and respond to the coronavirus. Funds can be used to reimburse for qualified expenses or replace lost revenue. This is obviously, that last piece is something that we're spending a lot of time on these days, getting a lot of questions about. They cannot be used to cover expenses or lost revenues that have been reimbursed from other sources. So if you're in a state that has added a per diem, for example, West Virginia has a $20 a day additional Medicaid per diem, or if you've received PPP loans that you're going to apply for forgiveness for, you can't use those same expenses to qualify your use of the provider relief funds. The use of the funds is prescribed and subject to reporting and audit requirements, and noncompliance is grounds for recoupment. Claudia or Al, anything to add there? All right. So moving on then, so this is just a quick slide, just kind of shows you how the distribution, this information is available on HHS, on the HHS website. What you'll see is that so far the vast majority of the funds actually remain, or the biggest single pot of the funds, it's not a majority of the funds, but the biggest single pot still remains undistributed. But the first and second phases of the general distribution funds make up the majority of the allocation. As of today, roughly about a little more than 3/4 of the total funds have been allocated to either one of the general or targeted distribution funds. So next, I'm going to hand it over to Al Grimes, and Al Grimes is going to talk to us a little bit about some of the programs that are currently active and accepting applications for new payments or new reimbursement. Al?
Thanks, Andrew, and good afternoon, everyone. The balance of the programs obviously have not been closed yet. When we're referring to active CARES programs, active CARES Act programs, primarily we're discussing the $5 billion that's currently in place for skilled nursing facilities. This amount split almost evenly between $2.5 billion for COVID-19 rapid point-of-care diagnostic testing devices and supplies, and then 2.5 billion for performance-based distributions for scheduled for the fall of 2020. The distribution was announced August 7th for mid-August distribution, with the initial 2.5 billion there for testing to go out for testing, staffing, and PPE needs, but they didn't issue guidance as to how that allocation method was determined, how the 2.5 billion was going to be split among facilities. They did specify that the balance of this 2.5 billion for performance-based distributions is looked to be coming in the fall based upon performance, quality performance criteria that will be evaluated, including using QIO participation to help determine the scoring. The reimbursement is also for the testing and treatment of uninsured patients, and has the next the last active CARES Act program at the moment is the general distribution phase 2. If we could go to the next slide, if you, Claudia or Andrew.
No, I think that's good.
Okay, if we could go to the next slide.
Yep.
Thank you. And the general fund distributions that were highlighted initially were part of a $65 million amount to be distributed. Phase 1, which we've already seen, was basically 2 tranches of $50 billion in total. The first $20 billion was announced and released April 10th of this year to immediately be distributed to 320,000 eligible providers across the country. And that's being referred to as Tranche 1. Effective April 24th, they began the distribution of the remaining $20 billion, with a little over 9 billion, 9.1 billion, going to 15,000 providers of Medicare fee-for-service services, excuse me, and with the balance of that 20 billion to be available to applicants to go to the portal. So that accomplished 50 billion of the initial 65. Currently, the phase 2 that's now open impacts the Medicaid, the CHIP, dental, and certain Medicare providers. Initially, they specified that applications were going to be due by tomorrow, August 28th. However, they posted on the website this week, August 26th, that due date deadline has since been extended to September 13th, 2020. Now, according to the website, they have this statement in place that says providers will still be given the detailed provider relief funds reporting requirements and instructions and data collection template, along with the necessary data elements that they need at a future date. So, but it will be made available for when the reporting system portal is to be opened, which is currently targeted for October 1st, 2020, which we discussed in later slides. So the only advice they give us there is that providers should continue to check back periodically to the HHS website for updates. Do y'all have anything you want to add?
No, I will point out that as you mentioned, Al, this was one of the things that has just changed here in the last couple of days. We were expecting that enrollment in phase 2 to close out this week, but the HHS is keeping it open for another couple of weeks to give providers more time to apply. So we'll go on to the next slide. I think that's you as well, Al.
Yes, sir. The phase 2, to be eligible, a provider must have, and all of these are ORs, you'd be any one of these. You must have billed Medicare fee-for-service between January 1 and December 31st, 2019, or be a Medicare Part A provider that had experienced a CHOW, a change of ownership, and billed Medicare fee-for-service in 2019 or 2020, and you hadn't been able to receive a payment under phase 1 of the earlier general distribution, or you billed Medicaid, CHIP, or Medicaid managed care between January 1, 2018 and December 31st, 2019. So in essence, over a period of 2 years, or billed a health insurance company for oral health care services as a dental service provider, or be a licensed dental service provider who does not accept insurance and has billed patients for oral health care services. So one of the elements that have come out on the HHS website concerning phase 2 general distribution, they've removed an earlier prohibition that had specified that if you received money under phase 1, you were no longer eligible. Well, they've removed that. You can submit an application under phase 2. The providers who received these can apply, and if you have not yet received a payment that is approximately 2% of your annual revenue from patient care for, I believe it was 2019, wasn't it, Andrew?
Yeah, 2018 or 2019, depending on when you were open, I believe.
Which one, right? Yeah. Then you may receive additional funds based upon that.
And the only thing I'll point out real quick, just to kind of keep us moving here, and is that, that second item there, the Medicare Part A providers that experienced a CHOW, we have seen some clients who, had a CHOW and got caught in a window where they were ineligible or couldn't get a payment in phase 1. And so if you fall into a bucket where you are a current provider, but you didn't receive a phase 1 payment, you need to be exploring this phase 2 of the general distribution.
Yes, if you would go on to the website and explore the application, or contact one of us and we'd be happy to direct you that way.
Well, next slide I think is you as well.
Yes, sir. Under the phase 2 instructions, they specified that there are 6 actions for providers interested in receiving phase 2 money for distribution funding would have to go through. One is they're basically broken down the prepayment and post-payment processes. Under prepayment is determining eligibility of whether you fit one of those criteria we had immediately presented on the slide, or additionally, you have to be eligible for one of or all of the following criteria: that you filed a federal income tax return for 2017, 2018, 2019, or you're exempt from filing a return, that you provided patient care after January 31st, 2020, that you did not permanently cease providing patient care, in other words, cease being involved in programs or as a business, did not receive a previous general distribution payment totaling approximately 2% of your annual patient revenue from 2018 or 2019, which Andrew mentioned on the previous slide. And for individuals, if you had reported anything on a Form 1040, gross receipts for providing patient care. All of those are involved in determining eligibility. You also have to validate your tax ID number, your TIN, and then you have to actually file for the funding, submit the application through the portal. The post-payment process is you receive a payment, attesting to that payment, similar to the attestations you may have filed under General Distribution Phase 1 or one of the other programs. And then an element of this is going to be the report on use of funds, which we discuss in later slides. Andrew or Claudia?
Yeah, thanks, Al. And Claudia, I think you're up next to talk about a couple of the other programs that are open, starting with reimbursement for uninsured patients.
All right. This is something that's important to keep in mind, because we know that we have individuals that have lost their health insurance as a result of the downturn in the economy. So there is a provision where you are able to get reimbursement for testing individuals who have no insurance. So that means they have no insurance of any kind that's available to cover those costs. So testing those uninsured individuals can be billed through a portal, and we have the link to that in our resources slide at the end of the presentation. So you can submit your claims for those kinds of testing costs. Also treatment, if you have treated someone who is uninsured and has a primary diagnosis of COVID-19, then those treatment costs can also be billed through the portal, and you'll be paid at Medicare reimbursement rates. The testing and the treatment for a primary COVID diagnosis has to be provided on or after February 4th of 2020. And the payments, as I said, will be billed at the Medicare rate. So it's important to really make sure that you understand how to determine whether or not the patient for sure does not have any other insurance coverage, that you do go through the proper steps so that you can let the patient know what if anything, they'll have to pay if you're dealing with someone who's uninsured. And no balance billing will be allowed in that instance. So the funding that comes from this, there's $2 billion that's available as part of the Families First Coronavirus Response Act. And there also may be funds that are available through the $175 billion of provider relief funds. But when that money's gone, then no more reimbursement will be available. So word to the wise, you want to be sure to submit your claims for uninsured testing and treatment of COVID individuals timely. And if you, as with all of these websites, there's a lot of information there. Particularly this site is very good. There's a lot of information, instructions on how to go through the claims, submission process to make sure you have all the information you need, and of course the frequently asked questions that we find on every one of these websites. Anything else there?
No, I'll point out very quickly, and we'll try to keep moving, but that the no balance billing provision is important, and just keep in mind that there's lots of use of terms about, this is for patients with an actual primary diagnosis of COVID-19. If you've read your terms and conditions, you may also seen them use terms like presumed or presumptive cases of COVID-19 or possible cases. And so, if you have questions about the meaning of those terms, don't hesitate to reach out to ask. They all apply to slightly different circumstances and mean slightly different things, and just be cautious when you're reading these. And
one other thing, Andrew, if I can add, I was going to mention the out-of-network providers. If you're taking care of someone who's in a Medicare Advantage plan and you're not, able to bill under that plan, or the patient would not normally come to you, they're able, because of the pandemic, they're able to go anywhere that is available to them to get their treatment. But the provider has to bill amounts that are limited to what the patient would have paid if they'd gone to an approved provider. So the out-of-network, that out-of-network is something to really keep your eye on to make sure you don't overcharge.
Great point, Claudia. And so I think the next slide is on the additional SNF funds. I think that's yours as well.
Yes, and we know that now we have an additional $5 billion in funds, I'll put quotes around funds, that have been available because they're not immediately available as cash in any event, but they're split into two different buckets. There's $2.5 billion that is available for testing devices and supplies. So this is, some of you, I'm sure, have already received these rapid point-of-care diagnostic testing devices, and an initial supply of the testing, the additional supplies that go along with those testing devices. And this is going to enable you, as CMS will require, that all nursing homes in states with a 5% positivity rate and greater test all nursing staff each week. So there's this new staff testing requirement, and the whole idea of this is to give facilities the additional equipment and devices which have been a problem for testing purposes all along. So they've been deployed. They were initially sent out a few weeks ago, and some providers, I'm sure, have received them. Now, the second thing that has created a whole lot of confusion, I think, among nursing homes, and it's very easy to see how this happens, but there is $2.5 billion available for successful completion of a new CMS COVID-19 training modules. And just yesterday, I believe, this information was published Even though we knew it was coming, I think July 22nd, there was a press release saying it was coming. But there is a website that it's the Quality Safety and Education Portal, and we have that link in our resource slide. And you can go to that. I'm not even quite sure if the training, I think there are some modules that are there that you can go ahead and get started, and they're for different levels of individuals. But people have been asking about this. Where's the training? How can we get the certificates? And so you'll want to make sure to consult that that website, because that information is relatively new. Anything else you guys can think? Oh, here's more information regarding those details, which just came out. So there's training that's targeting frontline nursing home staff, and there are 5 modules there. You can see you probably have had training in these areas, and your staff have, in a variety of different ways, but these are new modules that CMS will give you credit for completing. So, and then there's also targeted training for nursing home management. So it's not just the nursing staff or the staff on the floor that's going to be expected to take these training modules. Management's going to be able to, it should also be able to, should take these as well.
Claudia, I'll point out real quick, as you mentioned, that the CMS's communication and HHS's communication on this has been really confusing. You know, there is on the CMS website, there are, you know, labeled as COVID-19 infection prevention control training programs, but the specific scenario-based training that has been referenced in the press releases was literally just announced yesterday. And so these are supposed to be completely new modules. Different type of training than the previously announced or the training that's on the website. So just keep that in mind. We know we've had a number of clients who found this, you know, navigating this to be very confusing. They've had people take training, you know, is that training sufficient? But this is new training, and this is what we believe it appears is you're going to have to take in order to qualify for these funds.
And you need to sign up at that website in order to be able to do that. So everybody will have to go to that.
Well, and as a sidebar, if you'll note that the 5 modules that staff, frontline nursing, have to take, that's also the same 5 that management have to take. They have 5 in addition.
Right.
Yeah, that's the point.
So the next slide, Al, I think you've got the next slide, and we're going to start talking about reporting requirements associated with the provider relief funds.
Well, it's everybody's subject that they really want to nail down, and unfortunately, if you came to me for that today, you might be slightly disappointed, because as usual, HHS, I believe that was it August 17th, Andrew, that we were supposed to have something, and
yes,
it was pushed off. Well, the initial reporting requirements that were discussed when all of this first began had specified that terms and conditions were going to require quarterly reports to be filed by July 15th of 2020. But in a frequently asked question on the website, on the HHS website dated 6/13/2020, they specified that recipients no longer have to need or are needed to submit those quarterly reports, that HHS will be handling them themselves. However, on August 14th, HHS published some additional information, which they said doesn't let us off the hook, that we would still have reporting requirements for targeted and general distribution funds. And on the next slide, Claudia,
I'll just add before you get to the next slide, you know, what HHS ultimately did is everybody that received funds had to go in and attest to those funds. You know, probably everybody on this call went through that process in April and May. And HHS basically said, we're just going to compile that information and report that and deem that as meeting these quarterly reporting requirements. But as Al said, they did come back and say, but we're still going to make you do some reporting. And Al, you want to talk about who has to report?
Well, under the August 14th post-payment notice of reporting requirements that we just referenced, all providers who received a payment of $10,000 or more under one of the programs, or one of the relief fund mechanisms, will be subject to the reporting requirements. That under the general distributions, this means like the initial Medicare distribution you may have received, the additional Medicare distribution, and the Medicaid, dental, and CHIP distribution. Under targeted distribution, those that are more specific to various industry elements, high impact area distribution, rural, the SNF distribution. If you receive the SNF distribution, you will be subject to the reporting requirement with other benchmarks you'll have to meet. Indian Health Service and the safety net for the hospital distribution. So I don't know if the elements on the August 14th, 2020 memorandum, we were hoping that they were, when they said that there would be additional reporting requirements, would be more detailed. However, they only specified that detailed instructions regarding these types of reporting will soon be made available. I know that's a new phrase for us to hear, but yes, they did it to us again. Andrew or Claudia?
Yeah, no, I just to point out here, I mean, as Al said, we don't have the templates yet or the data collection forms. They are promised before the reporting portal opens on the 1st of October. So I think I've got the next couple of slides to talk about a little what will need to be reported. Claudia, do you have anything to add to that prior slide?
The only thing I was thinking of is that really applies to everyone.
Yes.
So everyone
No, it does.
have to do that.
And they did specify, I mean, the only additional element, that detail they gave that hadn't been in the language before, was that these reports will allow providers to demonstrate compliance with the terms and conditions that you signed to receive the funds. Granted, that's not very much more detailed than we had. However, you can refer back to the terms and conditions and get an idea of what they're trying to zero in on and document.
Yeah, no, good points. So what will need to be reported? So what we do know, like I said, we don't have the final reporting forms. We don't have the data collection forms yet, but we do know that in general, HHS is going to, require this reporting in order to demonstrate how you've used the funds, essentially. The government wants to know they gave you some money. They didn't ask you if you want it. They just gave it to you, and now they want to know how you spent it. We know that the funds can be used to cover lost revenue, and we assume and are expecting providers to be asked to document that lost revenue. And we know that the funds can be used to cover healthcare related expenses to prevent, prepare for, and respond to the coronavirus. And we've given you some examples here on this slide of what those types of expenses will look like. What do we know about the reporting requirement timeline right now? Well, as Al's mentioned, October 1st, 2020, the reporting system becomes available. So HHS promised to have a portal open on the 1st of October. We know that all recipients must report within 45 days of the end of calendar year 2020 on their expenditures for the period ending December 31st, 2020. And they use this language is right out of the notice. They use the form expenditures, but we do expect it to be, you're going to be reporting on both expenditures, meaning things you actually spent money on, but also documenting lost revenue. And we feel like for most of our providers, for most of our clients, documenting that lost revenue is going to be key to documenting how you've used these funds. 45 days from the end of December 31st is actually February 14th. That's a Sunday, so as a practical matter, we're expecting that first report to be due on the 15th. If you've documented the use of all your funds by the end of December 31st, or even before December 31st, as soon as you've documented that you've expended all the funds, you can actually file a report immediately. So if you've already feel like you've completely utilized your provider relief funds and you're ready to file, as soon as that portal opens on the 1st, you could theoretically file your reporting, though it's probably unlikely we're going to know what the forms look like before then. So if you could actually file on October 1st, you would be really on the ball, I think. If you didn't use all of your funds prior to or before December 31st, 2020, the guidance says providers must submit, and this is very interesting, a second and final report no later than July 31st, 2021. And so there's an implication there that you actually have to have used all of your funds by July 31st of next year. We'll see how this all plays out, but clearly I think there seems to be a mood at the federal level that, COVID's going to be over by then and you should have used all your money. And, the real serious, and the reason why documenting lost revenue is so important is that, if you can't document that you've used the funds correctly, we're pretty confident that the government's going to want anything you don't document the use of, they're going to be asking for it back. So some things to consider. Claudia or Al, anything you want to add there?
I was just going to mention one thing, is that initially they had said that you would have to report when the public health emergency was declared over. And I'm not sure how many of us think that the public health emergency will be over by the end of this year. So, but anyway, that's a little bit different tack that they're taking here by suggesting that you should be able to have used all your funds by the end of the year.
Well, and I think that's a good point, because I believe one or more of the state Medicaid programs, their add-on or their additional check, specifies that they'll continue to make these until the public emergency has been declared over. So that open-endedness of that might push that there be a statutory end to the actual public emergency before perhaps we've expended all of our COVID funds, due to the fact that we may still have COVID in our building.
Good points. So considerations for COVID accounting. We tried to keep this relatively short. These are some things that these are things we're talking to our provider clients about every day. There's a lot. We could do a whole series of webinars probably on just the pure accounting piece. I don't know that we could actually get anybody to attend and stay awake through those seminars, but we could certainly do some seminars. When you're thinking about COVID accounting, our experience is most of our providers are doing a pretty good job so far of documenting how they're spending the money. But you want to be talking with your CPA, be talking, make sure that your accounting for the provider relief fund is consistent with the grant regulations. Make sure that you're identifying both direct and indirect costs that are reasonable, and that you're adequately documenting those costs. A lot of folks tend to forget about overhead or other kind of indirect costs. Make sure you're looking at your entire bucket. Make sure you're looking at those salaried employees and where they're spending their time, and do you need to be allocating some costs there. Make sure you maintain your supporting documentation. Keep your receipts. Now is not the time to be throwing stuff away. And remember that the federal grants do come with some specific accounting requirements. And you need to be aware of those. And we certainly would be more than happy to talk to you if you have any deeper questions about your specific circumstances. Claudia or Al, anything to add to that? If not, so we have a special guest today. So those of you who have been with us before, she's sitting very patiently and quietly there. But one of the big new reporting requirements is that has been added or noticed here recently is the requirement that providers be audited. And so we've asked Allison Jones. Allison is a senior manager in our audit practice to come talk for a couple slides about the single audit requirements. So Allison, over to you.
Thanks, Andrew. Good afternoon, everybody. Thanks for letting me sit in with y'all. So what's the deal with this single audit thing we've been hearing all about? Well, we could probably do an entire series of webinars on this subject, but we boiled it down to just a few key points for our purposes here today. So first, will you actually need an audit? Well, like many other things in the world of regulation, it's going to depend. It'll depend on, first, whether your particular federal funding that you've received falls under a program with a CFDA number. CFDA is the catalog of federal domestic assistance, which is exactly what it sounds like. It's a big old list of federal programs and their descriptions that the government puts together and publishes. And we can tell you now, and you've probably heard, that they've come out and said that PPP funds and the advanced and accelerated Medicare payments will not be subject to these audit requirements. So you can leave those out of your list of federal programs that you need to consider for audit purposes. We do know that the provider relief funds, the uninsured testing and treatment, EIDL loans, and a bunch of others will all be subject to these requirements. So you still need to keep an eye on those. So once you have your listing of federal programs that have a CFDA number attached to them, you'll want to figure out how much you spent under each of those programs during your fiscal year. So notice I said spent. It doesn't matter how much you received, it only matters how much you spent. If you add up all those amounts that you spent during the year and you find that it totals $750,000 or more, that's when the audit requirement kicks in. Also, the timing matters. So if, for example, you get, for sake of argument, $1 million and spend $500,000 in one fiscal year, and then you turn around and spend the rest the next fiscal year, you're good. The audit requirement won't kick in because you didn't spend $750,000 of it within one fiscal year. So an important thing to note here is that you need to also add up your spending under all federal programs where you've received some funding, so not just COVID stuff. So if, for example, a hurricane hits next week here in Florida, knock on wood, and you get $200,000 in FEMA funds for disaster assistance and spend it, then that goes onto the schedule along with all your COVID funding for purposes of determining if you meet that $750,000 threshold. So you have to look at all the spending in total, not just on a program by program basis. Everyone is sharing the love with these audit requirements. Both commercial enterprises and nonprofits will be subject to the regulations, but the audit may look differently depending on the type of entity that you have. Next slide, please.
Allison, I'll just point out real quick too to our audience, I think many of them may be experiencing this, $750,000 in the context of these HHS programs is not a huge threshold. If you're a 100-bed SNF, you got $300,000 in SNF money just based on the number of beds. Not to mention the additional payments you may have received for fee-for-service billings or anything else. So just can sneak up on you whether that you've received sufficient funds. And we'll head on to the next slide.
There was one question that just popped up. Someone asked that's pertinent. Can we claim the cost of a single audit as COVID-19 expense?
That is a very good question, and it's usually stipulated within the program guidelines and provisions itself. Sometimes yes, sometimes no. Good question.
So we don't have enough detail yet to be able to answer it realistically.
Yeah, and Allison, I know you want to get through your slides here, but we also have a question here related to this topic: is if you use the funds to offset lost revenue, does that count towards the $750,000? Because these grants are specifically enumerated to replace both lost revenue and direct costs.
Also a good question. The answer is we don't know yet. We can make assumptions that it's probably going to count. The reason I say we don't know yet is that the Office of Management and Budget comes out every year with a compliance supplement that lists all these federal programs and tells us kind of us auditors, gives us some guidance about the objectives and all the provisions of the program and suggested audit procedures and things to be looking for. The compliance supplement that just came out this month doesn't include these new programs. So there's going to be an addendum coming out later this fall where the AICPA has said that they expect those programs to be included in that supplement. So we don't really know yet.
Excellent. All right. Very good. So Allison?
Okay. So what exactly is a single audit? It's a really loaded question. The short answer is that it's the result of legislation from back in the 80s and it's the mechanism that the government uses to track accountability for the money it gives out. A true single audit has two components. Component one is an audit of the whole organization's financial statements under government auditing standards, which is a more stringent layer of standards than is applied to normal regular audits. Component two is an audit of the major federal programs themselves. So the testing for the programs is focused mainly on internal controls and compliance with particular requirements that are going to be material to that program. So that's a true single audit. There's a financial component, financial statement component piece, and then the program testing component piece. Now there's also what is sometimes called a single audit by some people, but it's actually a little different, is a program-specific audit, and that's focused only on the major federal programs. It doesn't delve into the entity's overall financial statements at all. So if you don't currently have an audit, or you don't plan to have an annual audit of your financial statements for any reason, then you may not be required to have that full-blown single audit that includes the financial statements. You may be allowed to have just the program-specific audit, focusing only on the controls and compliance related to those particular major programs.
So Allison, we got a question here. Do PPP funds count towards the $750,000?
No, they do not.
Yeah, that is a specific carve out, isn't it? I think.
Right.
Yep.
And
All right.
so, one other question I wonder, Allison, is that most people are going to want to do that program audit approach rather than have their whole set of financial statements subject to the governmental auditing standards, I would imagine, right? A much less labor intensive and costly.
Correct. If you can do it, do it. You'll have to meet the requirements, but yeah.
All right. So, and then Allison, you want to kind of talk a little bit about what what providers should be expecting if they think they're going to be subject to this?
Sure. So, all right, you think you may need this audit. So what happens now? Well, hopefully you won't be, beat up in audit by this little emoji dude when it comes to look at your records. The first thing you want to do is make sure you have an auditor who's both independent from you and your organization and qualified to do this kind of work. In order to do single audits or program-specific audits, our professional standards require us to do several things, including, making sure we have a certain amount of continuing education every year that's specifically focused on these types of audits. There's a lot of extra requirements, so not all CPAs choose to practice in this area. It's going to be important to make sure your auditor has lots of experience auditing federal programs and also that they have a clean report under the AICPA's peer review program. You'll want to check that out. So when does this thing need to happen? Important question, right? So if you have a financial audit already, the single audit or the program specific audit will generally be done at the same time your audit team is working on your regular audit for efficiency's sake. Now, if you don't have an annual audit already, testing can really start anytime after your year end, as long as your records are in order. And like Andrew said, don't be throwing anything out. The deadline for submission is 9 months after your fiscal year end. And as of right now, there are currently not any due date extensions allowed for 2020 fiscal year ends.
And that's an important point because the frequently asked questions say there are.
OMB originally came out and gave extensions for year ends through 6/30/20 and later rescinded and reversed that to cut out the 2020 year end. So there's definitely confusion out there right now.
Yeah. Allison, we've got another question here. Would all money received under the CARES Act be under one program? So if that's all we receive, would we have a program specific audit? Even if they already have a current external audit of the company's financials?
The CARES Act covers a myriad of federal programs, so you're likely to have several different programs that will need to be evaluated all together. It's possible you might have only one, but if you have a relatively complex organization, I'm going to be willing to bet that you're going to have some.
In this particular case, too, we know we have two CFDA numbers assigned to these CARES Act funds, right? So we know we're going to be dealing with two, one that applies to the general distribution and one that applies to the targeted distribution, then another that covers uninsured testing and treatment.
Right. And there are several others that may be applicable depending on, what kind of, operations different folks have and what you may have been funded for. So there may be other ones that come into play as well.
All right. So I know, and we've got some more questions here. We're going to try to get to everybody's questions. If we don't get to everybody's questions, we will be happy to try to address them later. We're going to go now, I think. So, Allison, anything else? Any final parting words for our audience here on the single audit requirement?
Yeah, I just wanted to touch on what folks can be doing now.
Okay.
I think that's probably the question of the hour. You want to start by putting together that schedule of all your federal awards that I mentioned earlier. Make sure it includes all the COVID and non-COVID related programs. If it's federal money and it has a CFDA number, it should be on that schedule. Make sure all your records are accurate. You have all your ducks in a row to show that you spent the money on allowable costs and within the provisions of the program. And most importantly, discuss all this stuff with your auditor if you have one, or your accountant if you haven't hired an auditor yet, just to make sure you start that communication early to avoid a bunch of surprises later on.
Excellent. Good advice. All right, guys, we got about 10 minutes left. Claudia is going to take us and just give us a really quick overview on some of the important changes to the frequently asked questions that have happened since our last webinar. And then we're going to take a couple of client questions from the chat and a couple other questions that were submitted early and try to get through those. So, Claudia, you want to take a quick pass through the updates to the facts? Oh, you're on mute, Claudia.
Oh, you can't hear me.
Yes, now we can hear you.
Oh, the dog was barking, so I wanted to put it on mute. We've had a lot of questions come in. I've seen a whole variety of them pop up in the chat box, so I'm sure we'll want to cover those too. But one of the things that's really critical to pay attention to, these frequently asked questions change several times a week in many cases. I mean, trying to keep track of them is a monumental task. So some of the important ones that have been clarified since the last time we had this session was that relates to the changes of ownership, and we've already talked about some of these. Can a new owner accept the prior owner's payment? We know that's not true. If the seller, I think most of these we've been over. If you acquired a provider in 2019 or January of 2020 that didn't bill any Medicare fee-for-services in 2019, then you could submit documentation in that portal in order to receive, you cannot submit information in order to receive payment through the portal. Cost reports, one of the important things regarding cost reports and treatment of these provider relief funds is that we have not received any instructions from CMS as to how these are to be presented on the cost report, which raises a lot of questions when it comes to some of the Medicaid reporting deadlines that are already coming due in certain states. So we're going to keep our eye open and hope that we'll have some of those guidelines soon. From a federal tax perspective, can you exclude from gross income the provider relief fund payments as a qualified disaster relief payment under the Internal Revenue Code? And the answer is no. And let's see, I think we covered if you received excess funds and you're absolutely certain that you're not going to be able to use them, and you have more money than you're going to be able to expend on COVID-related items or revenue loss, then you probably do want to return the money, but to proceed very carefully with that, because we're not at the end of the public health emergency yet at this point and don't really know what might come in the future.
Claudia, when you touched on it briefly here, the cost report treatment, PRFs, and I know we have, we're seeing more and more questions from clients in Tennessee and West Virginia. We've got a couple of questions in the chat here about the TennCare funds that are out being paid out in Tennessee, that where providers are getting additional money through the form of just direct grants or additional per diems, and we don't have cost report. We don't have information on what the reporting requirements are going to be for those funds. yet either. I mean, this is I'll just point out, this is a huge issue right now. You know, the issue of how we're going to mesh the reporting on for your Medicaid cost reports and your Medicare cost reports. You know, how we're going to deal with, you know, different states, or they're trying to piggyback on the federal rules, but they're also trying to, you know, stay in line with their state Medicaid plans. And it's just, you know, this is going to be, it is going to be a challenge, I think, for the next year and a half as we work through the cost reporting cycles for 2019 and 2020. I mean, Al or Claudia, anything you would like to add there?
Just that it's hard to piggyback the Medicare regulations when we don't have them yet. So.
Well, and the flip side of that is with the states, their departments are going to be waiting on CMS. They're waiting on the other shoe to drop until they see the clear instructions, even for their own specific programs. They're not going to issue final regulations. They're going to wait for that because they might have to make amendments to their state plan. I mean, among other things. They have to take some things into consideration being further down the conduit from CMS. So that is everybody's being held hostage, if you would, waiting these regulations and instructions.
So then, Claudia, the facts on parent organizations. I know this is something that it's probably way more detailed than I know we have time to go into, but you want to just touch on this if it may impact some of our audience out there.
Yeah, we've had questions about a parent organization. Can they transfer general distribution funds to its subsidiaries? And we've gotten clarification. That's on page 12 of the current FAQs. You can find the answer to that there. You cannot, however, do the same thing with the targeted distributions. The targeted distributions are intended to be used by the entity that was eligible for them, and a parent organization would need to distribute those targeted distributions down to its subsidiaries. And if the subsidiaries, for example, are closed or sold or no longer there, you can't redistribute targeted distribution money. That's not at the discretion of the parent organization, in contrast to general distribution funds. So just keep in mind, if you're starting, you know, these are very important questions to be asked as to whether or not you should keep the funds, or are you able to distribute them as you would like to. You really want to make sure you're following the rules, and these have changed just very recently.
So we have a couple questions that were submitted ahead of time, and I think we still have a couple questions in the chat real quick. We got about 2 or 3 minutes left, so we'll try to go through these really quickly. Claudia, there's a question here about concerning revenue loss and how to track Medicaid rate add-ons, and we've been talking about this a little bit. How do we determine true loss in revenue from 2019 to 2020?
Well, I think, you know, what you want to do is make sure that you're looking at revenue. They've offered some various options. You can look at budgeted revenue. You can look at year-to-year comparisons. There's a bit of finessing that needs to happen when you do those calculations to make sure that you're not understating, I think, the amount of revenue loss. And that is something you want to continue to do throughout the course of the public health emergency.
Yeah, make sure you're working with your CPA or your consultant, and just make sure you're capturing everything and not leaving money on the table. We also have a question here. Has it been confirmed if entities that file consolidated federal tax returns can reallocate general distribution funds between provider entities? So Claudia, you were just touching on that. We've got some recent facts that address that. I think you've probably already addressed this question.
The important thing is to make sure you have those frequently asked questions, or the one that's pertinent, in your file, so you can explain why you did it that way in case it changes down the road.
Yeah. And just keep in mind too that there is a difference between targeted funds and general distribution funds. So if you need to make sure that if you're redistributing money, you need to make sure you know which bucket you're redistributing it from. And then I think we've already touched on this one. Will a facility which in good faith attested to stimulus funds when received but didn't have enough lost revenue expenses to cover the full amount be required to pay back a portion of the grant? And the answer is, Claudia, I think you just mentioned earlier, is yes. That's, you know, and this is where you just want to make sure you have a very sharp pencil before you do your reporting. When you're thinking about calculating lost revenue, you want to be very careful about that.
And we'll send specific FAQs that deal with these issues
Yes.
back to the people who requested it. So you'll have
we-
an answer.
We have a couple questions in chat here I want to try to get to real quick. We're almost out of time. Claudia, do we know if there is any kind of percentage of staff? This is about the new training,
I wrote that down. I saw that when it comes.
Yeah, do we have any guidance there yet?
I have not. Now remember, this just came out like 2
Yeah.
days ago, and I
2
have,
days ago.
Yeah,
2 days ago it came
I
out.
have read. I know everybody wants to know this because they want to get access to that money. I have read so far everything that we could find on it, and I haven't seen. You know, I haven't. Does it mean everybody? I don't know. So I think that's something we're going to have to wait to clarify. We'll let. If as soon as we see any information like that, we'll post it in a Reingruber Healthcare alert, so that if you want to be on the mailing list to make sure you get those updates, or you can always just call or email.
And then we have a question about, asking, are we sure that we can use the funds through July 2021? And
yeah, I sort of butchered that answer a little bit. Yes.
No, go ahead, Claudia.
We're talking about 7/31/2021.
Yeah, 7/31/2021. That's the date of the final reporting. The second and final report has to be filed by 7/31/2021.
Right.
And so,
I believe it would cover expenditures that have occurred in 2021 up to that date.
up to that date, right?
Yeah,
But we don't have,
definitive.
I don't think we have specific guidance on yet. This is just an implication, when they have announced that the second and final report. So you just reading into that, if you've got a final report that's due on 7/31/2021, there's an implication there that you will have used all the funds. So guys, we are out of time. And so for our audience today, thank you so much. I'm going to turn it over to Jamie Terrell very quickly, but Claudia and Al, thanks so much. Allison, thanks so much for being our special guest today. And Jamie, I'll give it back to you.
Yes, so Jason and Steve, I know you guys still have some questions in the chat. We'll follow up with both of you guys offline there. Just to wrap things up, thank you to our speakers again for being with us, preparing this information. It's always very helpful. Still a lot of unanswered questions, but we're going to keep these coming to you guys until there are no unanswered questions left. So that may be a high bar to set, but we're happy to do it. Please continue joining us for these. We've got some great programs coming up here. We've got dates on September 17th and 24th. One on PPP for those who have got those funds and are interested in the latest there, and then a continued discussion on compliance and what you can be doing to be prepared. So with that, thank you. We hope to see you again soon. Please feel free to reach out if you do have any questions. That is what we're here for. We're happy to help you there. And yeah, we hope you stay well, and we'll catch you next time. Thank you, everyone.
Hope y'all found it useful.